Welcome. Thanks very much for joining us, everybody. Really interesting session. This is the first session that we're having at MIPIM 2022. We're going to be focusing on European residential investment. Great panel here. Fantastic to have people here in the room as well. A joy to be in person again here in Cannes. Really interesting topic. On the right-hand side of your screen, you will be able to ask questions, chat. I'll be monitoring that during the session, and I'll try and pick up yours as well, your comments and your views joining us on the live stream. But let's start with just some introductions. Maybe starting with me. Sorry, I forgot to do that. For those who don't know, my name's Richard Vett, and I'm the group publisher at Real Asset Media. We run a series of events, around 70 to 80 events a year. And this is part of a series for the International Investors Lounge that we run both at Expo Real and MIPIM, and there's a full program throughout MIPIM. Lots of interesting topics, so do join those if you get a chance. So let's start with introductions. Pavlos, over to you.
Thank you, Richard. So my name is Pavlos Gennimatas. I'm heading up the European Living team at Hines. What we're doing is we're collaborating with all the country teams in any investment and development project that has beds. The biggest focus is resi for rent. We have a strong track record and pipeline in the student housing sector. We have invested in serviced apartments. We believe that senior living is coming next. We invest across the risk spectrum. Our flagship core fund invests heavily the last years in the living sector. Our value fund as well. And now we have the recently launched Core Plus fund. But with that said, the biggest exposure that we have is through development. Given how nascent the sector was 3-4 years ago, development was the right way to go. And it's been an exciting journey. We had about 4 years ago or 3.5 years ago a gross development value a little bit over 2 billion. Now we are reaching to a value close to 14, having all of the strategies.
Great, really interesting. Thank you. Sofie, over to you.
Thank you very much. And first of all, it's amazing to be back in person after 3 years. So great to be back, and very excited to see the vibe here at MIPIM. My name is Sofie Raaschou. I'm part of the living transaction team with NREP. We are a Nordic fund manager with around 14 billion euros assets under management. We are about 500 employees. We are headquartered in Copenhagen, where I'm also based. And our biggest fund is value add focus, so we do quite a lot of development. Residential is our key segment. About half of our business is in residential. We also do logistics, office, retail, everything else. We are also very product and very ESG oriented. So we have spent several years developing, and I think on ESG we've set ourselves a very ambitious target to be net zero by 2028. So we will be very busy for the next 6 years, and that's without any offsets, and it's both embodied and operational. So yeah, we are pretty busy at the moment finding the right solutions for the future.
Great, thanks very much. Rainer, over to you.
Good morning, everyone. My name is Rainer from International Campus Group. We are an investor, developer, operator in urban living concepts, which means student housing and young professional living. We're covering Germany, Austria, Netherlands actively, and are looking into CEE and into the Nordics as well. Currently, we run a portfolio of some 8,000 beds across these jurisdictions and are on a strong growth path. We have added some 2,500 units last year and are keen to do the same this year and next year. And yeah, it's great to be back here, at least after a long break. It's a little bit chilly still, but when the sun comes out, I think we will all see the mood and the vibes that we have learned over MIPIM over the last years as well this year.
Great, thank you. Agata.
Hello, good morning. My name is Agata Jurek-Zbrojska. I'm from CMS Law Office. We have the offices all over Europe, almost in every country. Maybe we are missing some of Nordics, including the CE. I'm based in Warsaw, responsible for real estate department. I'm personally responsible also for the developing of legal advice in the living sector for Warsaw and CE, which is really developing segment in CE at the moment. So I hope to give you also a bit information on that. Welcome, everybody.
Great, thanks, Agata. Graham.
Good morning. My name is Graham Place. I'm CEO of Box Architects. I feel a little bit of an outsider, really, here. Perhaps I'm here for balance, I don't know. Our role is to deliver for our clients the type of accommodation that these guys have in their portfolios. So it's our business is based on the premise that we actually think about the people. So we're more people-focused than money-focused in a way, on the basis that if we can improve the quality of people's lives, then people will want more of the buildings we design. So we have a commercial view. If we're going to improve the quality of people's lives, we have to actually build something. So it has to be commercially viable, has to be creatively inspired, but it has to be delivered.
Yeah, and I think one of the interesting topics as well that we'll drill down to in a little bit in this is ESG, and especially around that, the changes in terms of design and the ability to be able to deliver both in the affordable space as well as in the traditional space. I think will be interesting. And if there's any questions from the room, please do just raise your hand or shout them out, and we'll make sure that we come to those as well. Maybe let's start with you, Pavlos. Just in terms of the sector, obviously there's been a huge amount of focus on living, as you mentioned there, Agata, as well, but specifically residential and logistics over the past 2 years during the pandemic, and obviously a bigger focus on residential as well. I suppose, what are you seeing as the key drivers for that? Where do you see the outlook at the moment going forward, particularly for the residential space?
Of course, when pandemic started, this sector proved to be a little bit more resilient, or much more resilient than others. But, it's a cliche, but it was an accelerated trend. Especially for Europe, the build-to-rent sector was something that was new. And the big growth wasn't only coming from investors. We have really seen the renters cohort expanding. We were considering initially student housing, and it was something really focused on ages 18 to 21, maybe 24. Then we started saying renters cohort up to 30. This became 35. Now it's becoming closer to 40. And if we add the senior living, then it's a small segment, generational segment that we leave out from the build-to-rent sector. So there is a lot of demand for good product, better lifestyle, better quality of life, and as the new generations are growing, they're not having the same dreams. It's another cliche. It's not about becoming 30-year-old and buying. It's about living better quality of life. So we strongly believe that there is more demand coming up, and the sector will further grow.
Okay, good. And Rainer, what are you seeing in terms of capital flows? Are you seeing sort of an increased interest across the board in residential? What's your sense of that?
Well, I think since last year we see a lot of interest in various sectors. Resi in Germany is still highly sought after by international capital sources. Looking into our specific segments, I think you can clearly make a deviation when it comes to the development side of things. It's more Anglo-Saxon capital that dominates the play, whereas then operating schemes are more the catch for pension schemes, lower risk profiles, pocket of money, who are attracted by these schemes. And being in that sector now for more than 10 years, I think it's fair to say that it has clearly evolved from a strange animal into, let's say, a normal accepted asset class, which fits into, especially when it comes to operational schemes, into every institutional investor's pockets.
And interesting to get your perspective on that, Sofie, as well, in terms of the Nordic side. What are you seeing? Are you seeing a sort of, is it viewed very much as a kind of safe haven, the residential sector? What's your take on that?
Yeah, I think both residential as a sector, but also the Nordics as such. Denmark is one of the few AAA-rated economies. We have very cheap financing, and that has just been attracting a tremendous amount of international capital. And what we're seeing now that we didn't see so much before is that the capital doesn't only flow into Copenhagen, the capital, it flows into the regional cities, and it really flows into now small provincial cities in very secondary locations. So that's something new that we didn't see before. So it's certainly considered a safe haven. We have low vacancy rates and so on. So I certainly echo what the others are saying.
Okay, good. I wanted to pick up a little bit on CEE, Agata, and also say just how extraordinary, from what we've seen in London anyway, the sort of efforts in terms of Poland and CEE more broadly as well, going into Germany in terms of the refugee crisis there. Are you seeing, I mean, it would be interesting to get your views on that if you wanted to share them, but also just in terms of the capital, are you seeing still, I mean, we've seen deals still happening in CEE, so are you still seeing that focus there, or are you seeing people withdrawing a little bit from the region? What's your sense of that?
Most difficult question came to me. Due to location, I will try to answer all of these questions which you asked. But let me start maybe with the future. So, what's your first question? And give you a bit of background what is happening now in CEE and in Poland regarding the living sector. So, what we are facing is simply that this sector, due to simple economic indicators, are growing because the younger generation, first of all, cannot afford longer to buy their own flats. So we are moving more to similar situations which we have in, I don't know, Germany, Amsterdam, UK. Of course, still this is very, very different because Warsaw, for example, is still on the first place of the affordability of the acquisition of your own department. But for example, Prague, not. Yes, that's of course connected with the amount of supply which is possible in these countries. But now also with all economic indicators, which we have the rising inflation and the rising interest rates, the more and more people will not again be possible for them to buy their own apartment, their own flat, so they will move to resi for rent. And we see this, that some of the investors, like from Nordic, as I said, they've come last years into the Polish market and they decided to enter this resi for rent market, but this is still very new because we are at the level of development. So we cannot still talking about the operational assets, but still something which is future, yes? So we still do not have a benchmark of rents and growth of rents and so on. So that's everything from that, it's not tested yet, yes? So that's how it looks. But what is important, it's the demography. And then maybe we'll go to the current situation as well, which from that perspective also improved the demand for rental flats and for flats. As we discussed before our panel, we know that currently in Poland we received like 50% of Warsaw more people now. And please believe me, who are not in Warsaw, we do not see any crowd of refugees on the street. Okay, we can see this on the main train station, which probably the photos you can receive. But then, automatically, they are able to find some places in families or in hotels or everything else. That's obviously some kind of temporary situation from that perspective. But on the other hand, it's we see that there are volumes, that there are places when they can stay, yes? Well, that's very difficult to answer your questions, how this whole situation will develop and will influence. We, of course, hope that, as we did in this couple of weeks, and managed to cope with this crisis, with ordinary people, to be honest, yes? Not anything like very organized from any kind of organizations, yes? But there was like from ordinary people. Like for me, the negos are ordinary people there, yes, and voluntaries. So that's all will influence the market, and from demographic perspective, definitely some of the refugees will stay. So they are giving additional people to work and to stay and to develop the country.
Great. It would be interesting to take, thanks for that, Agata. It would be interesting to take your perspective, Graham, on that from, because both playing into the sustainability side, but also just the volume of demand that there is prior to this in any event, means that modern methods of construction and those kinds of things are going to be coming more to the fore, I think. Do you see an increasing use of that, and how useful is that for things like affordable housing, for example?
We do. I think before I say about the affordable housing, you know, the people of Poland are an example to all of us, the way they are bringing these people in at the moment. In terms of the affordable housing, the off-site construction and modern methods of construction, absolutely. Over 60% of our design schemes now are using modern methods of construction. Off-site, the ESG element. I don't think necessarily we think about the social impact of and the advantages modern methods of construction can bring. And we were talking earlier about energy and energy content, the reduction in waste, the economics of building off-site and bringing to site. We've got the technology now, we've got the logistics, we've got the ability to bring these things through our towns. And it really is the way the market's going, absolutely.
Okay, I wanted to pick up a little bit just in terms of that, while we're on this sort of ESG kind of topic, from the investment side, how much of a driver is that for you? What's driving it? Is it regulation? Is it investment capital? Is it actually the people who will be living in, you know, in the beds or in the, you know, however we want to put that? What are the kind of key drivers? Let's start with you, Pavlos.
I would say that the first driver is our DNA at Hines, that we had ESG before ESG was created as a term, and this was part of the ethos of the founder. We have formed a dedicated team now, global team. In Europe it is led by Daniel Chang, and I would say it's the top of the priorities. Of course, it's all of the above to your questions. We do care about the people that we'll be living in, we do care about the cities, we do care about the investors. We cannot disregard anyone, and that's why this topic becomes much more complicated. Sometimes it can be quantified, sometimes it's more qualitative, and this is where it becomes even more dynamic and more exciting. If we look at it as something exciting, then we believe that we may be a little bit more successful, and we can learn from the past. Our flagship core fund, the European Core Fund, has been #1 globally by GRESB the last, I believe, 4 years in a row. So we've seen the way, but the challenge is, as you said, to find new ways and to become better. Definitely a priority, and definitely all of the above.
And Sofie, just coming to you, how much of this is also, you know, there's ESG has been a focus, but there's definitely been a focus on the S in that, the sort of social impact side. How important is that particularly for you, and is that driven by the investment capital? You know, who's leading the way?
Well, I think also echoing what Pavlos said, that ESG is really high on the agenda, and it's also a part of where NREP was born. We took a stance more than 10 years ago that this is key for us. Our mantra is make real estate better. We really want to improve the whole urban ecosystem and everything around it. And one of the things that we are also doing is we've launched a venture capital fund that invests into sustainable technologies. For example, carbon cure, which improves the CO2 reduction on concrete. And we are using that on a project already now in Copenhagen called UN17, where we are also implementing the 17 United Nations development goals. So that's not only on the sustainability side, it's also on the social side. So we're experimenting with new ways of designing homes, where we are trying to really test new things to see how can we create the best homes for people. So these homes will look quite different from anything that you have seen before. So it's definitely key for us. Throughout our concepts, we also keep affordability in mind. We want to keep the rent as low as we possibly can, even though we add more value. And we think, it's a benefit for the tenants, for the end users. But at the end of the day, it also means they want to live there, and that helps us on the bottom line, that we can reduce the churn rate, for example.
And just this is for anybody actually, but just in terms of that demand side, I mean, you mentioned there that it's a different product that you're creating now. Obviously, during the pandemic, where everybody had to and continues to a certain extent to have to work from home and live from home, does that increase the demand for larger spaces, for more outside space? Has that made a kind of permanent change in terms of people's expectations if they're looking for somewhere, within this rental sector?
Well, I think there are some shifts in the amenities and in the quality that has been sought after. Yeah, so micro-location, leisure activities have been more in focus than this has been previously. But at least in Germany, I've not seen cities emptying, like, for example, London, where a lot of commuters were gone and the city was more or less empty. Yeah, to a certain extent, for example, in Berlin, yes, but not in others. Yeah, and there is a visible trend more to suburbs, to increase, let's say, personal quality of the living environment. But what you could also see in some of the German cities is now that the retro trend kicks in. Yeah, that people are again going back into cities.
Okay, so cities coming. Yeah, sorry, Graham. Go ahead.
I would agree. I think there was a reaction to think that when we started working from home, we would stay at home, and we're all going to need an extra room in our house, and we were doing design competitions and how we're going to have home working as a thing. But we didn't take into account, the sense of isolation and the mental health and the benefits we get from being parts of communities and coming together. And I think people have realised that, and they want to get back to the offices and to the cities and to the. So I don't think it is a permanent thing. In answer to your question.
Okay, good. Let's look at some of those points across Europe where there's supply-demand issues. What are you seeing in Germany? Rainer, are there areas, you mentioned that people are, suburban areas. So does that mean from an investment perspective, people are beginning to look more at those kind of secondary locations rather than just the sort of, the main cities? What's your sense of that?
Well, if you look into the development of the last years, for sure, everybody looking into Germany from outside was looking at top 7, top 10, where there was a strong focus. But with prices rising and demands or offers shrinking, demand shifted more into secondary cities. As we have a decentralized setup in Germany, there's no London or Paris, even though some believe Berlin is something similar. But you see a lot of cities who are described and characterized by their economic strength, plus the attractiveness of the living environment, plus, last but not least, universities. You have a lot of cities like 30, 40 cities outside of the top 10 who are highly attractive for investors due to the fact that they host universities, they host startup structures, they host a strong economic environment, which is mainly the fact south of Frankfurt, so going south of the River Main, and partly in the north of Germany. There is unfortunately a situation that the eastern part still lags behind in economic development, and this is also visible in the attractiveness of these areas to investors.
And what's the position there in CEE, Agata? Is there, because you've obviously then got, for example, in Poland, you've got large secondary cities outside of Warsaw, some of which are potentially are more investable in some ways than some of the smaller capital cities in the rest of the region. So what's your view on that?
Well, exactly as you described, yes. That's in particular on the living sector, what was a bit different than other investments like offices when they developed, they mainly started to develop from the capital city and big cities. And in the living sectors, we see that there are, from the very beginning, a lot of investors and a lot of capital going not only to the capital city. Of course, there are some who are saying, yes, only capitals like Warsaw, Prague are the most important for us, and we will start with that. But it's not always the case. So there are some like German funds who invested and started from other secondary cities like Wrocław or Tricity or Krakow. And that's exactly for the same reasons as you just mentioned, yes. Of course, there must be relevant volume of inhabitants, but there are these important reasons like universities, like young people coming there and creating additional capacity, additional people who can live in the rented houses. And a bit coming to your question, which you asked about the size of the apartment, like here in CE, in Poland, my observation is that that's mainly the small apartments. And I think that they are focused, like investors developing these schemes are thinking not only and mainly about the young generation, yes, and young people who are the most interested for them to target as the clients. Yes, that's what I still believe. I think that in the future this will develop much more for more diversity products, but at the moment for rent sector there are like more smaller departments.
Okay, good. I mean, it'd be interesting also just to get a sense of how we see residential within that living sector more widely, because there's increasingly people who are talking about head of living rather than head of residential or head of, and that then encompasses student all the way through to senior living, and in some cases part healthcare as well as we move into that. I suppose, what's your sense of that, Pavlos, in terms of, how do you see, I suppose what would be student housing versus residential versus senior living? Is that all part of the same concept, really?
We're using the term living.
I know.
So, yes, I believe the concept is very much the same. It's the human-centric aspect of the product and the services through the operations to offer better experience. The variety of it is with different demographics, you have different priorities. And this comes with locations, student housing, the obvious next to universities. You go to build to rent, and the great part about build to rent is that if we were to see a heat map of great locations for residential, it wouldn't be like retail that you have one stripe and that's it, or logistics, you look at the transportation access, office, CBDs. Living, you have people that can have great quality of life, great attractiveness, and they can be in very different places. Of course, transit-oriented can help, outdoor space helps as well, but all of it, as living sector, comes down to very similar concepts: amenities, services, better quality of life, wellness. And if we also include the serviced apartments into living, and if we go on the, on the fence with hospitality and apart hotels, then all blends in how you offer better experience, and within this, it's one living, right?
Okay, good. And it's very rare that we have somebody who's on Nordics, who's in the Nordics. So it would be remiss of me to not ask about what's happening in the Nordics. So just in terms of that market, are you seeing similar issues in terms of demand and supply? What's your sense of the market, and I suppose the opportunities there, Sofie?
Which supply and demand exactly?
Just in terms of, I mean, is there an undersupply in terms of, I suppose, in terms of residential? What's the situation? Are you, for example, in the UK, we're massively undersupplied. There's got to be a huge amount of building in order to be able to get enough residences in place, really. So it'd be interesting to just know what the situation is with the market and where you're seeing some of those opportunities, Sofie.
Yes, well, certainly, speaking of Copenhagen, the city is growing tremendously, and like many other places, there is not enough land, so the city is expanding. What we've also been struggling with a bit is that we've had to build quite big units, which is an attempt to make room for families in the cities, and that means that we have a huge shortage of small units. It's very restricted to build anything smaller than 60 or 50 square meters. We can go down to 40 now, but that really puts a limit on how much can we do of the more, micro living and serviced offerings and so on. So that's in very, very high demand. So we are seeing, students and others living 2 or 3 people together to be able to afford the rent in Copenhagen. We've also seen the rent increase quite a lot, and certainly outpacing inflation in the past, as many years as anyone can remember. So it's very much a challenge. One of the things that Denmark and Copenhagen is also doing is we're actually creating a huge new artificial island, which will both add about 30,000 new homes, and it will also protect the city from rising sea levels. So it has a number of benefits. So we are trying to solve that. It's also a city where you cannot build high rises, so that means that the densification is quite challenging. Obviously, we also want more green spaces. So how do we solve all those challenges? And at NREP, we're keen to really take part in solving those challenges, and we work very closely with the municipality of Copenhagen to solve that. And we want to be part of bigger, urban development areas, also moving into infrastructure and everything around that. So we are very keen to help solve those challenges.
Yeah, it's interesting, the discussion, I think, around the crossover in the real asset space between the real estate and the infrastructure side, particularly in the discussions we have with cities. They're seeing those two things as very equal in terms of how they then seek to make their cities more attractive and increase that for the cities. And Graham, you're obviously having to deal with planners a lot, I would imagine, in that sense. But also, plainly, it doesn't make sense just to put residential where there isn't anything else. And Sophie mentioned there around the green space, but the mixed use element, the walkability, the city quarters aspects, presumably those are all key aspects from your perspective when you're looking at schemes or how you operate those.
Yeah, I mean, I wish planners would do what it says on the tin and plan towns rather than try to design buildings. They should leave that to us, really. We're good at that bit. I think the energy crisis that we
just in case there's any planners watching on the...
Well, I don't know how to plan a town, but I do know how to plan a building. Obviously, we've got the energy crisis at the moment. We're seeing the cost of energy going up hugely. So transport and bringing our towns together so that people can live near the amenities, near the park, near the gym, near the pool, is really important. And there's lots of innovation. I'm really excited to see your houses that we're never going to recognise. This is great. But there's all sorts of things we can do. I mean, a small thing we've done, we've developed a new way of building swimming pools. But we've got the cost of a swimming pool to less than £1 million, which means we can put swimming pools in communities. It doesn't have to be a great big out-of-town multi-million-pound development that you have to drive to anymore. We can change. The opportunity is phenomenal because there's so many different ways of doing it. But we need more mix. We need a lot more mixture. We need people to be able to move and flex as their families grow, as their families break down and become smaller overnight and then regrow without having to move to a different neighbourhood and leave your friends. It needs to be much more mixed in its locality, where the facilities are and where the green space is.
I think if I could just add to that, I think that's probably also a trend that we will see for tomorrow. So in addition to the services and the product, I think we will see much more entertainment and play and, you know, more excitement around buildings in the future. And I think I'm very curious to see how that will play out.
Okay, good. I wanted to pick up a little bit, obviously, Rainer, as well, because you're looking at that sort of student housing and micro-living side within the residential sector. How do you see, I suppose, differences within that versus what might be viewed as ordinary, you know, what would be called in the US multifamily kind of style residential? What are the differences, different drivers, different locations? What's your sense of that?
For sure there are differences, but I think the main thing is, and I'm pretty convinced within the next 5 to 10 years, we will see the end of ordinary coming, because the ordinary is changing. Yeah, if you look into Germany, which has a traditionally strong rental resi market, which is easily explainable by the low owner-occupier ratio compared to other European countries. You have stock that is built after the Second World War in the 60s, 70s, which has layouts, which has quality, which has locations. That is not what people are looking for today. And this is also something where I would put a question mark on partly this safe haven thing on German resi, because this part of German resi, for me, is up to being redeveloped over the next years. And as said before, the cultural landscape is changing. The family concept is not as dominant as it was in previous decades. We have in Germany, on average, 50% households without kids, which is not only young people, it's also elder people. If you translate that into urban areas, you are up to 70% of households without kids. In an environment of rising rents, in the light of affordability, there is a strong demand for smaller units. And now we come into play. It's not only students, it is also people who are singles, it's people who are commuting, who need a second place, work-related. And it's then also let's say, the last quarter of the life cycle, where we're then talking about senior housing and healthcare and totally different specifications. But looking at, let's say, the first part of the life cycle, where students having their first job is pretty much same or similar characterized product, there is a very, very strong demand as international educational traffic is growing all over Europe. Be the concentration from an economic point of view in various areas, not necessarily top cities, is an ongoing trend. And that meets a supply side in these markets which cannot satisfy the requirements that are sought after, starting from layouts, size, rent, location. And here is where the next 5 to 10 years will bring a massive change in most of the German marketplaces.
Yeah.
Agata,
As a lawyer, I wanted to add that's all true, what you are saying, and unfortunately we see, I don't want to criticize too much, but we see that some of our legislator and legislator are not going with such a future views. Yes, absolutely. You just mentioned, which surprised me, I didn't know that you have some, you cannot build a smaller than X. That's probably because we want to have a good human being good for human beings that they are living in bigger spaces, but on the other hand, this leads to totally different scenario, and this is because of regulations. The same like in Poland, we have some requirements in certain cases that in order to develop or redevelop we had the last year the situation when the developer wanted to redevelop the office complex to the residential, and they were obliged to develop the school within this area. And then we are coming to that what you are saying. So how big this school should be? Yes, how will be the demand really in that place? So that's something which we unfortunately observe, that the planning issues, the legislation is not that flexible. Oh, let's say it this way. Yeah.
And there's just not enough choice. There's not enough choice. All this planning restriction is just limiting what we can offer. It's frustrating.
That's coming through. Graham, I can tell you.
Well,
Pavlos,
I think the whole brakes on the planning process, certainly in the UK, is, you know, it's stopping the development happening. There's so much opportunity.
Probably everywhere. I mean,
Yeah.
it's not.
There's a demand and there's an opportunity, and the finance is there and the will is there, but these things put people off.
Pavlos, you wanted to pick that up.
Yes, when I was listening to these priorities being the same for different demographics, I think this is the exciting goal and challenging goal, how to blend in. Because we spoke earlier, and I spoke about student, senior, build to rent. How do you blend in this in a community and within the amenities? How this can have, of course, we care about synergies, but also better lifestyle, and this is also part of the S you asked before, of the ESG, how these communities are coming together.
Just because Hines is obviously active across a number of different jurisdictions, I know you're not responsible for the whole of Europe, but aspects of it. So maybe just a quick comparative as well in terms of some of the countries where you are investing and how you see those, Pavlos.
In terms of going back to supply and demand, or
yeah, well, I suppose, or you know, let's have a little bit look at the opportunities, maybe.
I'm trying not to distinguish, and because we are interested in all of the places that we have boots on the ground for different reasons in each place. You see the more mature places, of course. You see Germany, supply and demand great. On the other hand, the yield environment very low, which imposes some risks. You see same thing in Nordics, had fantastic yield compression the last 18 months. Now has become a little bit tighter, but still supply and demand is there and will be there for the next many, probably, years. We see other places that we feel we are the first movers. Milan, build to rent, didn't exist. Student housing. In the institutional world, we were one of the first doing the two schemes close to the Bocconi University. So different exciting aspects. We cannot disregard Spain. It is more mature as a sector, but it has evolved so much with the quality aspects and the amenities that we can say that it's different. So every city, every country has different reasons in order to be attractive. Some more mature, some more nascent, but I will not distinguish any as a priority.
Well, let me tempt you a little bit more, Pavlos, because we all, one of the things that we normally never get either is somebody who is Greek being able to potentially talk about the Greek market. It would be good just to get a sense of the Greek market, because we very rarely get a view on that. So,
the Greek market, of course, is different because the crisis a little bit more than 10 years ago was much more prolonged, and this was a big differentiator. The second differentiator is that the last 3-4 years, the growth that we have seen in terms of values and rents is probably the strongest in Europe. And if I would have a third, or maybe a fourth as well, differentiator is that the build-to-rent sector doesn't exist. I think everybody talks about cultural elements of South Europe. Greece is probably, if not stronger than Spain and Italy, about home ownership. The home ownership ratio is very high versus Germany, which is low. And the fourth one is the institutional capital the institutional capital, I believe the last 2 years, started looking to Greece. So if we think of all these different factors, I think that Greece is a little bit behind in terms of the growth of the living sector. With that said, maybe it can be even more exciting.
Okay, great. I'm mindful of everybody's time because we're in Cannes and finishing on time, if not being able to give you 5 minutes to get to your next meeting. So let's just do a quick roundup, I suppose, of what you're seeing as the key or most influential trend, or where you're seeing the biggest opportunity, or both, should you wish. But let's start with you, Graham, just in terms of, I suppose, what you're seeing as the most influential trend, particularly for this area.
I suppose the most influential trend is this diversification into little sectors within the housing sector itself, the retirement living, the student living, and I think that will grow, and I think that middle portion we talked about will start to create its own little pockets. I think the UK strong home ownership concept, but I think the society can't afford it. We need a more agile, more flexible way to live. We need our housing to flex with us as we grow, and the way people live has changed. You don't get a job for life and live next door to your mum anymore. You move around the world. So I think we need a 360 approach. I think the planners need to understand what people want. I think the financial industry needs to get on board and start providing products for people that want to rent, so that at the end of their working life, they have funds available to continue renting. And you can't just sell your house. And so there should be other products coming in that support that. We need more modern methods of construction. We need to be thinking much more about how we can build quickly, cleaner, more economically, how we can deliver sites. We're still mixing sand and cement with water, and piling one brick on top of another is ludicrous. It's the 21st century. That's what I think we should do.
Okay, a lot of challenges there to deal with. Good. Agata.
I don't think it's the trend, but I wish that this will be the adjustment for the change. We are really living in the constant changes, and that's all what you summarized right now. This is about the change. And looking into the legal environment, which is maybe the most closest to myself as a lawyer, I think that here it's a need for more flexibility and looking forward approach. That's thing. And the challenge, which to be honest I think will be the most important in the last years, a couple of years, is how to really put a focus on ESG, whatever that means. So with all their aspects, environmental as social and governance. At Ukraine and rising costs of constructions, development, etc. And like some kind of worry is if all of that will not go back to even more traditional thinking, also in development process, as you just described. So because that's then ideas are great and we are all for them, but at the end of the day, the economics come to the picture.
Okay, great. Rainer, let's do opportunities.
Well, I think most of the continental European countries provide a lot of opportunities. Looking into affordability in those markets where PRS is not existing or is underrepresented, where there is growth potential. And in other markets where it is existing, like mentioned before in Germany and also in the Netherlands, it provides repositioning opportunities. And another thing which I believe is on the opportunistic side is looking into cities like Budapest, Prague, Warsaw, even now, as traffic has significantly slowed down in these markets in the last few weeks. And some projects there we have seen falling apart. due to the circumstances, and that also might provide opportunities for those who dare to go there now.
Okay, great. Sofie?
Yeah, I think if we take a bit of a macro view on the situation currently, I think it's become abundantly clear that we need to be self-sufficient on the energy side in Europe. And I think and hope that this will really accelerate the sustainability path forward, and that we will really see a very strong trend on green energy moving forward. I fear that in the short run there might also be an increase in the use of coal and nuclear energy and things like this, but I really strongly hope that will be a trend we see going forward. A place where I would see opportunities would be looking at the financing side. We already know now banks are more reluctant, banks are more conservative now. Uncertainty really kills financing, so I think there will be a liquidity crunch in many countries, and probably especially on the development side. So we might be coming back to a time where cash is king. If you're well capitalized, there will be opportunities if you can act fast, and I think that we will start to see those kind of opportunities now as a result of the rising financing cost and banks reluctant to finance or refinance.
Great. And last but not least, Pavlos.
I think the focus is on how we add value in the product definition without disregarding affordability. If we can combine these two, then it's easy to say it would be successful. So in order to achieve that, maybe you need scale, maybe you need the product specialization, but affordability and product definition, I think, is key. And one more thing on the E part of ESG, of course, fully agree on conversions or refurbishments, but sometimes it's very strong to ground up development. You get the next industrial area, you do tons of remediation, and you bring life into places that are very, very well located, but are outside of the city grid. This is also part of strong growth.
Yeah, no, that's interesting. And the next session that we will be running today, actually at 2:30 CET, is going to be on capital flows and winning cities. And that I think that renovation side is a really interesting part of that. Thanks very much to all of the speakers. Thank you, everybody, for joining us here in person and online. If you're joining online, you can join all of the sessions that we have here at MIPIM. And if you're interested in residential, you will no doubt also be interested in the ones that we've got on student housing and senior living that are coming up over the next couple of days. Later on today, we've got capital flows and winning cities, and then European debt finance and investment. So do feel free to join those. And the joyous thing about us all being together is that I can go back to being able to say, if you could join me in thanking both yourselves and the speakers for being here by applauding, that would be great. So thank you very much, everybody.